You know what nobody's talking about? The fact that we're watching the largest wealth transfer in modern history happen in real time, and most people have no idea it's even occurring. While everyone's distracted by headlines and political theater, something fundamental is shifting beneath the surface of the global financial system, and the clock is ticking faster than anyone realizes. Let me show you what I mean. Right now, as I'm recording this, we're sitting at a critical inflection point, the kind of moment that only comes around once every few decades, the kind where fortunes are either made or completely wiped out. And here's the thing that should terrify you. The people who understand what's happening are already positioned. They've already moved. The question is, are you? Think about this for a second. In the last 18 months, central banks around the world have purchased over 100 metric tons of gold. That's not normal accumulation. That's panic buying. The People's Bank of China has been adding to their reserves for 17 consecutive months. Poland just moved 100 tons of gold back from the Bank of England to Warsaw. Why? What do they know that you don't? Here's what's really happening. The global reserve currency system that's been in place since 1944 is breaking down. Not might break down, not could break down, is breaking down. Right now. And when a reserve currency fails, it doesn't happen gradually. It happens in stages, and then all at once. We're in those final stages right now. Let me take you back to 1971 for a minute, because this is where the current crisis actually began. August 15th, 1971. President Nixon closes the gold window. Suddenly, for the first time in history, the world's reserve currency isn't backed by anything tangible. It's just paper, just a promise, and for 53 years, that promise has been enough. But here's what most people don't understand. That promise was only credible as long as the United States maintained overwhelming economic and military dominance, as long as everyone needed dollars to buy oil, as long as there was no alternative. That world is ending. The BRICS nations, representing 45% of the global population, are building a parallel financial system. They're settling trade in their own currencies. They're creating alternatives to SWIFT. They're accumulating gold at a pace we haven't seen since the 1930s. And they're doing it for one reason. They see what's coming. Now, I want you to understand something crucial here. This isn't about politics. This isn't about being bearish on America. This is about mathematics. Pure, cold, unavoidable mathematics. The United States has $34 trillion in debt. That number is growing by roughly $1 trillion every 100 days. Think about that. Every 100 days, we add another trillion to the national debt. The interest payments alone are now over $1 trillion per year. That's more than we spend on defense. More than we spend on Medicare. We're paying more just to service our debt than we spend on any other single budget item. And here's where it gets really interesting. How do you pay interest on debt that's growing exponentially? You print more money. But when you print more money, you devalue the currency. And when you devalue the currency, you need to print even more money to pay the same debts. It's a death spiral, and we're accelerating into it. Look at what happened in 2008. The Federal Reserve's balance sheet was under $1 trillion. Today, over $7 trillion. They printed $6 trillion in 15 years, and most of that printing happened in the last 4 years. During COVID, they printed 40% of all dollars that have ever existed in 2 years. Let that sink in. 4 out of every $10 in existence were created in a 24-month period. Now, conventional economic theory says that should have caused massive inflation immediately, and it did, just not where they measure it. Asset prices exploded, real estate doubled, stocks hit all-time highs, but the CPI, the official inflation measure, stayed relatively tame. Why? Because of something called the euro-dollar system. There are trillions of dollars held overseas outside the United States that act as a sponge for all this new money creation. As long as those dollars stay overseas, they don't cause domestic inflation. But what happens when those dollars start coming home? What happens when countries stop accepting dollars for trade? What happens when the eurodollar system breaks down? All those trillions of dollars flood back into the United States. And when they do, you get the kind of inflation that destroys currencies, the kind that turns life savings into worthless paper. We're already seeing the early stages. The dollar's share of global reserves has dropped from 73% in 2001 to under 58% today. That's a massive shift. And it's accelerating. Countries are diversifying away from dollars at the fastest pace in decades. They're buying gold. They're buying other currencies. They're creating bilateral trade agreements that bypass the dollar entirely. China and Saudi Arabia just completed their first oil transaction in yuan. Do you understand how significant that is? For 50 years, oil has only been traded in dollars. That's what gave the dollar its reserve status. That's what allowed us to print unlimited money without consequences, because everyone needed dollars to buy oil. But if oil can be purchased in yuan or rubles or any other currency, then why hold dollars at all? This is the reset everyone's been talking about, not some conspiracy theory, not some shadowy plan by global elites, just the natural consequence of decades of monetary expansion finally reaching its mathematical endpoint. And when it happens, when the dollar loses its reserve status, everything changes. Your savings, your retirement accounts, your purchasing power, everything is denominated in dollars. And if those dollars lose value rapidly, you lose everything with them. Now, here's where gold comes into the picture. And I want you to really understand this, because it's not about gold going up. It's about everything else going down. Gold doesn't change. An ounce of gold today is the same ounce of gold it was 100 years ago. What changes is how many dollars it takes to buy that ounce. And right now, we're at a point where the number of dollars it takes to buy an ounce of gold is about to explode. Look at the technical setup. Gold just broke through $2,700. That's a major resistance level that's been tested multiple times over the last year. When you break through resistance like that with the kind of volume we're seeing, it typically signals the beginning of a major move, not a 10% move, not a 20% move. We're talking about a potential doubling or tripling from current levels. And here's why I'm so confident about that. Every single fundamental driver is pointing in the same direction. Central bank buying at record levels, geopolitical tensions escalating, debt levels unsustainable, money printing accelerating, dollar losing reserve status. These aren't isolated factors. They're all connected. They're all feeding into each other, and they're all bullish for gold. But there's something else happening that most people aren't paying attention to. The physical gold market is completely disconnected from the paper gold market. On the COMEX, the futures exchange where gold is traded, there are roughly 100 ounces of paper gold for every 1 ounce of physical gold. That means if even a small percentage of people who own paper gold decide they want physical delivery, the whole system breaks down. And we're starting to see that happen. Delivery requests on the COMEX are at multi-year highs. The premium for physical gold over paper gold is widening. Dealers are running low on inventory. Wait times for certain gold products are stretching to weeks or months. This is what a supply squeeze looks like in its early stages. Now, I know what some of you are thinking. Gold doesn't pay interest. Gold doesn't generate cash flow. Why would I hold gold when I could hold stocks or bonds or real estate? And that's a fair question. But here's what you need to understand. Gold isn't an investment. Gold is insurance. It's the only asset that has no counterparty risk. It's not someone else's liability. It's not dependent on a government or a corporation or a financial system. It just is. And in a world where every other asset is dependent on the stability of the financial system, where every other asset is denominated in a currency that's being systematically devalued, gold is the only thing that maintains its purchasing power over time. Not because it goes up, but because everything else goes down. Let me give you a concrete example. In 1971, when Nixon closed the gold window, gold was $35 an ounce. A new car cost about $3,500. So you could buy a new car with 100 ounces of gold. Today, gold is around $2,700 an ounce. A new car costs about $48,000. So you can still buy a new car with roughly 18 ounces of gold. Actually, you can buy almost 3 cars with that same 100 ounces. Gold didn't go up. The dollar went down. And gold maintained its purchasing power. That's what gold does. It preserves wealth across time. And in a period of monetary chaos, in a period where currencies are being devalued and financial systems are breaking down, that preservation of wealth becomes absolutely critical. Now, here's something important I want to mention. If you're sitting on a significant amount in retirement accounts, $100,000 or more, you might want to look into how gold IRAs work. I put together a free guide that covers the mechanics. How to get physical gold into your retirement account without triggering tax penalties. What the rules are, all that stuff. It's in the description below. Not trying to sell you anything. Just information that might be relevant if you're thinking about protecting your retirement savings. Worth checking out if that applies to your situation. All right, back to where this is all heading. Because the price action we're seeing right now is just the beginning. We're in the early stages of what I believe will be the largest gold bull market in history. And I don't say that lightly. I've been following these markets for over 2 decades. I've seen multiple gold bull markets. But this one is different. This one has every single catalyst aligned at the same time. Think about what happened in the 1970s. Gold went from $35 to $850. That's a 24x increase. And that was just from inflation and the breakdown of Bretton Woods. We didn't have the debt levels we have now. We didn't have the geopolitical fragmentation we have now. We didn't have central banks buying at the pace they're buying now. And gold still went up 24 times. Now, I'm not saying gold is going to $60,000, but I am saying that a move to $5,000 or $10,000 is not only possible, it's probable given the current setup. And if we see an actual currency crisis, if we see a real breakdown in the dollar's reserve status, those numbers could be conservative. Here's what you need to understand about how these moves happen. They don't happen gradually. They happen in stages. You get a period of accumulation where smart money is quietly buying. That's what we've been in for the last few years. Then you get a breakout, where price moves through major resistance. That's where we are right now. Then you get the acceleration phase, where price moves exponentially as momentum builds and more people pile in. That's what's coming next. And the thing about the acceleration phase is that it happens fast. In 1979, gold went from $200 to $850 in less than 2 years. Most of that move happened in the final 6 months. People who waited, who thought they had time, who wanted to see more confirmation, they missed it. By the time it was obvious to everyone, the move was already over. That's why timing matters. That's why understanding where we are in the cycle matters. And right now, we're at that critical juncture where the breakout is happening, but the acceleration hasn't started yet. This is the window. This is the opportunity. And it's closing fast. Look at what's happening in the mining sector. Gold mining stocks are still trading at historically low valuations relative to the gold price. The GDX, the major gold miners ETF, is barely above its 2020 highs, even though gold is up significantly since then. That's a massive disconnect. And when that disconnect closes, when mining stocks catch up to where gold is trading, you're going to see explosive moves in individual mining companies. But here's the thing about mining stocks. They're leveraged plays on gold. When gold goes up 10%, mining stocks typically go up 30% or more. But they're also more volatile. They're more risky. They're dependent on management execution, on production costs, on 1,000 different operational factors. Physical gold is pure. It's simple. It's the foundation. And in a crisis, it's what people want. We're also seeing something interesting in the silver market. Silver has been lagging gold for years. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is still around 85 to 1. Historically, that ratio averages around 60 to 1. And in bull markets, it often drops to 40 to 1 or lower. If silver just catches up to its historical average relative to gold, you're looking at a 40% move in silver from current levels. And if we get a real bull market, if we get the kind of industrial demand surge that's possible with the green energy transition, silver could massively outperform gold. But again, silver is more volatile. It's more industrial. It's more dependent on economic growth. Gold is pure monetary metal. It's what central banks hold. It's what survives currency crises. And right now, in this environment, that's what you want to own. Let me tell you about something that happened in 2008 that most people don't remember. When Lehman Brothers collapsed, when the financial system was on the brink, there was a brief period where gold actually dropped. People were selling everything to raise cash. Gold went from $1,000 down to $700 in a matter of weeks, and everyone said, "See? Gold doesn't work as a safe haven. It goes down in a crisis just like everything else." But here's what happened next. Within 6 months, gold was back above $1,000. Within 3 years, it was at $1,900. Because once the initial panic subsided, once people realized the Fed was going to print trillions of dollars to bail out the system, they flooded into gold. And the people who bought during that brief dip, who had the courage to buy when everyone else was panicking, they made fortunes. We might see something similar in the coming months. We might see a brief pullback as markets digest what's happening. But that pullback, if it comes, will be the opportunity of a lifetime. Because the fundamental drivers aren't going away. The debt isn't going away. The money printing isn't going away. The geopolitical tensions aren't going away. And as long as those factors are in place, gold is going higher. Now, I want to talk about something that doesn't get discussed enough. The psychological aspect of owning gold. There's something deeply reassuring about holding physical gold in your hand, about knowing that you own something real, something tangible, something that's been valued for 5,000 years. In a world of digital everything, where your wealth exists as numbers on a screen, where it can be frozen or seized or devalued with the click of a button, physical gold represents true ownership. And that psychological aspect matters more than people realize. Because when the crisis comes, when the system is breaking down, when people are panicking, you need to be able to think clearly. You need to be able to make rational decisions. And if you're worried about your wealth, if you're watching your savings evaporate, you can't think clearly. But if you know you have a foundation, if you know you have real assets that will maintain their value no matter what happens, you can stay calm. You can be strategic. You can take advantage of opportunities while everyone else is panicking. That's the real value of gold, not just the financial protection, but the psychological peace of mind. The ability to sleep at night knowing that no matter what happens in the markets, no matter what happens with the dollar, no matter what happens with the financial system, you have something real, something that will still have value on the other side. And here's the thing, we're not talking about some distant future crisis. We're not talking about something that might happen in 10 or 20 years. We're talking about something that's happening right now. The signs are everywhere. The bond market is flashing warning signals. The yield curve has been inverted for months. Credit spreads are widening. Bank failures are increasing. The commercial real estate market is imploding. These are all symptoms of a system under extreme stress, and the Fed is trapped. If they raise rates to fight inflation, they crash the economy, and the debt becomes unsustainable. If they lower rates to support the economy, inflation accelerates and the dollar loses value. There's no good option. They're going to choose the path of least resistance, which is to keep printing money and hope they can manage the inflation. But you can't manage inflation when you're creating it. You can only delay the consequences. And the longer you delay, the worse those consequences become. This is why the smart money is moving now. This is why central banks are buying gold at record levels. This is why billionaires are allocating significant portions of their portfolios to hard assets. They see what's coming. They understand the mathematics. They know that when the reset happens, when the system breaks down, the only things that will maintain value are real assets. And gold is the ultimate real asset. So here's what you need to ask yourself. Are you positioned for what's coming? Do you have protection in place? Or are you going to wait until it's obvious to everyone, until gold is at $5,000 or $10,000, until the crisis is already here? Because by then it's too late. By then the opportunity is gone. The last chance before the reset is here, right now. This moment. The breakout is happening. The fundamentals are aligned. The technical setup is perfect, and the window is closing. Every day you wait is a day closer to the acceleration phase, where prices move so fast you can't catch up. This isn't about fear. This isn't about doom and gloom. This is about being prepared. This is about protecting what you've worked your entire life to build. This is about making sure that when the system resets, when the dust settles, you're still standing. You still have your wealth. You still have options. The choice is yours. But the clock is ticking, and time is running out.